Are the markets setting up for a rally or a further sell-off? That's coming up on 3 Minutes on Markets and Money. So over the last couple of days, markets continue to really kind of consolidate along this recent set of lows, not really making a lot of move either in one direction or the other. The markets are trading below the 50-day moving average, which is providing a bit of overhead resistance. The market failed at it yesterday on an attempted rally. The NASDAQ is also sitting at a 1-month low as well. This also combines with the fact that we're seeing the most negative sentiment by investors in over 30 years. The AAII, that's the American Association of Individual Investors, their bullish sentiment is now at the lowest level we've seen at any previous bear market bottom. Honestly, the market has not really done a whole lot now for the last 6 months. We have to go all the way back to September to find a time that we were at this same level. So despite the fact that the markets have done all kinds of action over the course of the last 6-7 months, we went to all-time highs, we've had the Russian invasion, the markets really have just not gone anywhere. In that process, though, over the last few weeks, markets have been on a sell signal. Not surprisingly, markets have been declining back towards support. Markets are now very oversold. Now, we're not near a low yet in terms of our money flow indicator, but we are starting to work off that bigger extension of the money flow overbought condition. So ultimately, in the course of the next couple of weeks, if this market kind of continues just to gravitate here sideways, we're likely going to see that overbought condition worked off, trigger a money flow buy signal, and that's going to set the markets up for kind of a counter trend rally that could take us back up to these previous peaks here that we just saw just a couple of weeks ago. This is going to be a little bit consternating for a lot of the more bearish commentary in the markets because, again, a lot of people are expecting the markets to fall apart here. We're going to have a major bear market, but that's also a problem. Sentiment is very negative. Positioning by institutional and individual investors are very negative at this point. In other words, very light positioning. That very light positioning, very negative sentiment suggests that if this market does get a turn here, then all of a sudden we're going to get a lift to the upside. That's going to start to reverse that negative sentiment, providing more fuel for a rally. That's going to start to really consternate a lot of these bears. And importantly, what it'll do is it'll turn the negative media bias back into bullish, saying, see, it's different this time. The inverted yield curve didn't matter. The Fed hiking rates doesn't matter. It's all going to be good. It's a Goldilocks economy. And then that's the moment where ultimately these other factors that are in play, slowing liquidity in markets, slowing economic growth, we'll start to see a pickup in layoffs and a decline in wages. When that all begins to occur, the recessionary impact will start to take effect, but that'll be later on this year as the Fed is hiking rates. But the first thing's got to happen is we got to get this bearish mentality out of the market, reverse that negative sentiment back to bullish. Then that's what sets you up for the next leg down in the economy and potentially the next leg down in the markets and set that precedent up for a bear market. But there's so much negative sentiment right now, it's actually hard to have a bear market. I know that's counterintuitive, but that's exactly what contrarian investing is and why it works. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you next time.